On today's episode, we're going to take a quick look at Nvidia. The stock price dropped over 5% on Tuesday, but more importantly, we are going to take a quick look at two earnings. Both Microsoft and Google reported earnings on the same day, so let's take a quick look at them. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. So let's kind of start off with the overall tech market sell-off, right? We're still seeing big players down. I think today was probably one of the scariest days, or one of the biggest red day in a while. Nvidia, one of my favorite companies, was down about 5.6%. I do want to say, in the short term of things, I do expect more negativity. So I just want to say this not to scare investors off, but hey, to somewhat be emotionally prepared of what could happen. I'm not here trying to time anything, but I'm just saying in the short term, things could get ugly. So that's why we have that long-term mentality. For me, like I mentioned, short term, I'm a little bit bearish, but that doesn't mean I'm going to sell any shares. In the long terms, I'm still super bullish, and that's what helps me kind of through these tough times right now. I do want to say we probably won't hear much or see any true direction in the semiconductor market until Thursday, when Intel reports earnings after the market close. Maybe we might see a glimpse of where the semiconductor market might be going on Wednesday when the market closes and Qualcomm reports earnings. So I want to say those are two important earnings to keep an eye out for the semiconductor industry. For me, I'm still bullish in the long term for the semiconductor industry, and I'm really enjoying that I put money on a weekly basis because I get to dollar cost average in some of my favorite positions at the moment. All right, so enough with that long-term mentality ramble. Let's take a quick look at Google. First, the stock price right now after hours is down about 2.5%, 2.8% as I just refreshed. After hours tend to be very volatile, so you might see some bigger swings throughout the night. And whenever this video posts, who knows, the stock could end up green. All right, so let's take a quick look at the results. For the first quarter, Google advertising revenue grew about 22%, kind of topping consensus expectations. However, YouTube advertising revenue grew just 14%, and that was coming short compared to what analysts expecting. And I do believe this is one of the major reasons the stock price is down. We are seeing a lot of competition, at least in the short-term video, for YouTube and things like TikTok, and mainly TikTok, right? So investors might be worried that people are kind of transferring, especially the younger users, are transferring from watching YouTube into TikTok. If we take a quick look at their total revenue compared to same time last year, we can continue to see strong growth in certain markets. For example, Google search and others grew a nice amount. We see a slowdown, like I mentioned, in YouTube ads. I do believe this is the biggest fear affecting the market right now. Then you also still have huge growth in the overall Google advertisement, about 54.6 billion this quarter compared to 44.6 a year ago. We're also seeing a nice growth in Google Others, which is their kind of hardware products. Then we do see a nice massive growth in Google Cloud, which is now $5.8 billion. Then the other one that I want to say that showed some impressive growth was the other bets. And this is kind of Alphabet's other small things like their Waymo self-driving cars. So it is pretty cool that these are growing. Right now, these are small portions, but if any of that technology becomes super amazing, it could be another revenue driven for this company. I want to thank the Motley Fool for sponsoring this video, and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service, so what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. Now, if we take a quick look at operating results, we can see Google Cloud is still not profitable. And another thing, that I do want to mention is if we take a quick look at their bottom line number, their diluted earnings per share and the net income is actually lower than same time last year. And some people might be worried about that. I do want to say if you take a quick look at this line, other income or expenses, they did have a huge hit of expenses this quarter. For those not familiar though, right now you have to report either unrealized gains or unrealized losses, and that is what's happening for Alphabet or Google. If we take a quick look at the other income and expenses, we can see that same time last year they had a huge gain on equity securities, but now they have huge losses. Overall, I want to say the results were pretty great. I don't think there's anything kind of to continue this sell-off happening in Google. I'm really liking the prices this is at. This is one that I recently added to my portfolio or kind of dollar cost average into, and one that if it stays at this level, not this week, but next week, has a high potential. We are seeing kind of the competition here with TikTok, which might be a bit fearful for kind of Meta Platforms investors, and that company reports earnings tomorrow because this might be some hindsight that TikTok is taking some market from YouTube. Is more likely going to continue to take market share from Meta Platforms. Now, if we take a quick look at Microsoft is a whole different story. Right now, the stock price is up 4.75%. I do want to say Microsoft did beat analyst revenue expectations by a bit, and it also kind of gave outlook for the upcoming quarter, which is around the range where guidance, where analysts also expect. If we take a quick look at their earnings, there is a lot to kind of dive into here. But first, remember, Microsoft has three main segments. Their productivity and business process grew 17%. Intelligent cloud coming in clutch, growing 26%. Their more personal computing still grew 11%. And this was one of the markets I was a little bit worried about because this is one that deals primarily with consumer spending, but it's still growing 11%, which gives me at least some positive notes on the consumer market for now. Total revenue was up 18%. Now, if we take a quick look at their productivity and business process, I mentioned that revenue grew 17%, driven by Office 365 and LinkedIn. One great thing, I think Microsoft has done an amazing job with that Office 365, kind of creating this form of subscription service. And LinkedIn is doing pretty well with the current hot employer market at the moment. We see huge shift, the great reshuffle that many people are calling it. Companies like LinkedIn are doing really well with things like advertising and kind of engagement in the platform. Next, if we take a quick look at the intelligent cloud, that grew 26%, driven by Azure and other cloud services. This bodes well for me and for companies that I believe deal in the semiconductor industry. Is telling me that cloud market is still super strong, still growing at impressive levels. So it gives, again, great vibes for me for companies like AMD and Nvidia. Now, if we take a quick look at the more personal computing, we see revenue grew 11%, driven by Windows as well as search and news advertisement. I wonder if more people are using Bing, because that's a strong growth of about 23% there. Windows OEM revenue grew 11% year over year. Again, this is interesting to me because I did think that we were kind of seeing a slowdown in consumer spending, but it seems like that's not the case. We can see Xbox and content service revenue grew 4%. They also do mention that Xbox hardware revenue grew 14%, driven by continued demand for Xbox Series. And I do want to say this is usually not the case, this kind of growth in the gaming market, especially this late already into the kind of console market, but the overall shortage has still leave pent-up demand for the gaming market. So again, I do believe that also bodes well for the consumer world, that we're seeing strong revenue growth there. So I want to say Microsoft is another one that I actually recently added last week with Google. So Microsoft, amazing results again, nothing crazy, right? But we're still seeing 18% revenue growth on a huge player like Microsoft. This is to me a no-brainer to have in my portfolio. Not one I'm selling at these levels, even with the 4% upbeat. This is one that I don't mind dollar cost averaging into. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.